Good morning, everybody. It's Kula Dula from RawStocks. We have another edition of our pre-market prep. And today, looks like it could recover, but will it? We're going to dive into all of that. Stick with us. Quick shout out to our sponsors, GammaEdge and Black Box Stocks. Without those guys, we would not be able to provide this to you every single day. So shout out to those guys. Much love. And yeah. So yesterday we saw a pretty decent size, not necessarily recovery candle, but definitely a hammer like, right? And is this going to be another time we see 6,600 protected? As you can see, the recovery on the close here ultimately put us over the top of 6,600 and create another rally like we saw last time we dipped below this. I will say that we have cracked our distribution level with the daily 4. We talk about this often. And this has space to recover, but not necessarily to have a breakout, okay, based on this, okay? We could create some type of range, so to speak, between 6,600 and 6,700. This could create some range for a while until we see, some into like maybe late October into November. We could create a range in here. So I need you to be cautious of that, okay, in regards to this. Yes, we've broken this, but generally speaking, after a long run like this would be a pullback, maybe some chop. We don't necessarily always see some type of distribution and then a straight pullback. That's not necessarily how it works. You see some type of range distribution to the upside, and you see a range being built. So is that something that's going to happen here? I think it's more than probable that we're going to see some level of recovery here. I think in the grand scheme of things, you do need to be cautious of some level of, head and shoulders type of deal where we start to push into this negative pressure here in this zone, and watch for this to potentially be some type of play where we push down towards 6,500. I've talked about this where I thought we could be in this position towards the end of the month to kind of align with JP Morgan's collar there. So I think you need to be watching that as a potential play. Definitely potential. I know we're running out of days for that, so it would really have to start today probably for that to really be a possibility. Now, let's dive right into it. Okay, let's get into our charts. So first things first, the S&P, let's pull this up real quick. We're going to see a level of let's put it this way. We still remain call dominated. Okay. Yesterday that flipped, but when you take away 0 day, it still remains call dominated. We're seeing that now. I think as we continue to do coverage here, we're going to watch this net delta here at 6,000 as an indicator, or 6 million, 60 million as an indicator for a potential pullback. If we start seeing this drop significantly, that's where we'll be interested in potentially seeing some type of pullback. I think that's fair to watch. Okay. There's some other large areas, 6,500, 6,400, all have strong net delta. These are people who are still in long positions. But as we see those start to shore up some more, that is where we'll look for some real type of pullback. Now, 6,800 remains, 6,800 is the upside here as far as speculation goes. I think as long as we stay in a call dominated type of environment, that's likely to be hit, okay, by the end of the year. But that has to remain the target, and that speculation needs to be there. Today, we have a tremendous amount of overhead pressure and a push towards Man, this has kind of changed since I did my report. It's interesting. So must have got new data. 66.25. This is probably why it pulled back. This is probably why I pulled back pre-market. We got the rest of the data in. So at 7:30. So 6,600 to 66.25. This is kind of where we're looking at. There's a lot of overhead pressure here. We remain put dominated with this based solely on the 6,600 draw. So as we push up in this range, this, from what we're seeing, this cap is actually down here now. And we're seeing just a lot of range. Now, I'm going to leave this how it was, but I need you to know that realistically, our range is starting to try to form somewhere right here, just being stuck around 6,600. So with us being such a draw towards 6,600, I would imagine anytime we get away from 6,600, it's probably going to be faded back towards 6,600. So look for outside of 0 day puts to pull it back towards that 6,600, and we'll probably rope from there unless we start to see speculation grow outside of that. I think it's more than likely we find ourselves chopping at 6,600, and this really being a day of not much to it. We'd have to see call speculation grow. We'd have to see 6,600 start to shrink, and really start to see something like 6,650 grow for us to really move. Now, the case where it is right now, it's shorted under 66.25 for a pullback towards 6,600. That would be the only move here, and it'd likely find you'd slip it, you'd bounce from it, and it'd be probably be a strong bounce, and then you would have to look for the short here for the fade, and this might even be a really grind out move from there. This one, it's not as confident, but you could take it, and then you would have to really scalp that, because I think this right here will be quick. But watch this move, this secondary visit here for a slow grind back towards 6,600. If we break through this area, where are we opening right now? 66.25, go figure, right on it, right? So if we bounce off of this level, watch for 66.50 to definitely be an upside target here, okay? Watch for that definitely to be an upside target. All right, let's move on. We got to do this one kind of fast today. NVDA, it is a shit show, okay? It remains with a 180 wall. I was talking to one of our members today, and I talked about how the market cap, I believe, the data says go. The market cap says no. In my opinion, I think we have a high level of, exposure with AI across the market. And I think, it's sitting at a 4 trillion market cap here at 180, kind of pumps the brakes on the overall move for this thing to get its expansion. However, we still have the likes of, say, 200, 185, and 190 still to be, had here. But as it stands right now, especially today, 180 is virtually your pivot point, right? Crack over 180, you might see us pushing to 182.5 to 185, in my opinion. And if that is the case, then we're definitely going to 6650 on the S&P. But I have a feeling it's probably going to be a chop fest. 180 is your draw, and likely cap. Okay. So watch for maybe even some type of move like this today, where you see it bouncing between 177.5 and 180. Break above 180, sure, you can get your potential gamma squeeze towards 185. All right, watch for this volume accumulation point here for resistance at that 183 zone to 185. Okay. I'm not really huge on shorting 180 for a further move down than just 177.5. Okay. Virtually looking for the close here. That would be it. Tesla, everybody loves Tesla. Let's pull the data on Tesla. I haven't looked at this morning, to be honest with you. This is a 430 wall here, but a lot of speculation to the upside, including 500 on the full complex here. 430 remains the wall right now. It's a hell of a lot of exposure. 435 would be your subsequent cap there if we squeeze over the top of that. I don't imagine we get much more than that. There's a decent amount of covered calls being sold in towards this 440 area. And then I am even into 432.5 right here. So you got to imagine that there's some there's exposure here, sure. But I imagine we probably just chop between 420, or yeah, 420, 425 really, and 435. I think that's probably going to be our range today. But if we have to dial it in, it's going to be 430 to 420. Okay, so we're dialing this thing in to be exact. There's nothing but buying here, and 425 for the expected gamma wall right here. That's what we have. Okay, your squeeze target would be 435, which is virtually your previous day high right here. And you would watch for that to be sold on and try to accumulate towards 430. But watch for volume. If volume and volatility starts to kick up here, IV starts to kick up on these contracts, you could see expansion over the top of that to 440. But I find that unlikely. I find that probably where we're sitting at right now. You could see this accumulation here. If we don't get hung up here on this, yeah, I think we're going to hit 435, but watch for that thing to pull back down towards 435, maybe make a couple runs, and just kind of, play peekaboo over the top 435, come back to 430. I think we'll be stuck in this range here today. All right. I'm not a super big fan of any of these tickers and playing. I think the most likely thing you could do is play the 180 call for NVDA at 177.5. And you're looking for it to hold 177.5. You're going to get a $2.50 move here, and that's probably your most likely play, especially at the open, and watching some type of move where we see this thing retest 177.5. Watch for buyer step in and watch it push up to 180. That's probably your most accurate type of play this morning. But I would imagine this is going to be priced accordingly for that move, and you got to watch for some level of theta burn. So, all right, that's going to cover it on those tickers. Today we're going to make a little express version. We're going to make this short. So I hope you benefited from this, and make sure you guys subscribe, share this on Twitter, X, whatever. Subscribe on YouTube, comment, like, do all the things, do all the engagement things, help support the channel, help support the family. So until next time, we'll catch you later, guys.